Boo! At the open, all-time high for the S&P 500.
It's your boy Jimmy. Jimmy.
Now what's worth doing is worth doing for money.
Straight from y'all street to Wall Street.
Anybody tells you money's the root of all evil doesn't make up happen.
Dudes wake up, hope their girl turned on so they can get a little bit. Only woman in the morning, I wanna turn on this. Deck it quick. While the average man looking at it's sad like she fine as it. I'm over here looking at tails and whips like 5-6. I left the mayhem for the market. Now I don't want a dope spot, I want a stock pick. I know that booty got dropped, triggered my stop losses, but I ain't got time for your wop. My V-wops crossing. Rich with hot V's and pushing hot key strategy and plans to make grand. Still in my wife beater, Batman pajamas, house slides, and about 5 hot picks for the day. Cause I like the way the Dow bounces. 4 hot dips on call, so I got options. 2 with a lot of volume, 1 with a double bottle. Now I know dumb money don't understand. Am I talking about my trade or just thinking with my MACD? You see, we different in the way we move. You move with kittens and your dog, I move with bears and bulls. I got a green thought, grow with the marijuana. Waking up with the future, some commas. Jump out of bed, big profits. Eat my bacon and eggs, big profits. Light up, watching them candles, profits. While I'm still in my sand, making profits. They used to watch me move them packs and stop. Now I watch moves in the NASDAQ. Profits. Used to run from the ATF and them cops. Now I run down ETL, make profits. I jump out of bed, make profits. Eat my bacon and eggs, make profits. Light up, watching them candles, profits. While I'm still in my sand, making profits. Yeah. See, me and Jim Cramer been talking mad money. Said today I'm taking a risk. They got the feds coming, but I got support here with me. I call a short squeeze. You get the drop, pull the trigger, and abort these. If she stay on my watch list, I might have to wife her. But I know better. I'm a true trading group lifer. Call up the Wolf of Weed Street. It's time to flip some profits. Go ahead, be hawking. Get your spot here. I'll double top that in the head and shoulders. Hit him up with this resistance. Watch him roll over. Cause I see John Wicks in contract. If I say I make $1 million a day, well, that's a large cap. You moving average, that's why you get crossed. Get split, get delisted, and knocked off. and I'm setting the whole block off. I'm buying GameStop and selling them roadblocks off. Jump out of bed, make profits. Eat my bacon and eggs, make profits. Light up, watching them candles, profits. While I'm still in my sand, making profits. They used to watch me move them packs. Now I watch moves in the NASDAQ. Used to run from the ATF and them cops. Now I run down ET. Hey, my family. Hey, go, what we doing, my man? Hey, make profits. Hey, Shug, Mike, what we doing? Hey, make profits. Yo, Wolf, Professor, what we doing? Hey, make profits. That TTG money gang. Hey, making profits. We some snipers.
Hey, yo. What's up, everybody? What's going on, folks? What's up? Happy Friday. It's the best week that the markets have had since November of 23, if I'm not mistaken. Up 5.5% on the week. We had a big rally day on Wednesday, obviously. Big pullback day yesterday, and we bounced back a little bit here today. And the week finished out pretty good. We had a wonderful day, a wonderful week inside of True Trading Group. It was actually a really big week. Was a really big week. We had some milestones reached this week. We had one of our members with one of their biggest, not one of our members, one of our moderators just had their biggest week ever in their trading career. We had a bunch of members that just had their biggest weeks ever in their trading careers. A bunch of members had their biggest single individual trades in their trading career, which is actually kind of easy to do when you have volatility like we've experienced for the last week and a half. The volatility that we've experienced in the last week and a half is some of the craziest volatility I've ever seen in my entire career. And I've been doing this a long time. I've been doing this for 18 years, going on 19 years. I began my trading career working at T3 Alpha Fund in New York City. My name is Michael Edward Parinati, by the way. I go by Michael Edward. What's up? Welcome. I'm the head trader and I'm the head trader and co-founder of True Trading Group. And I, began my career working in New York City at a fund called T3 Alpha Fund. And they had me go through a training program before they let me touch $1 of their money. And then 2008 happened, and that was the Great Recession. It was the big stock market crash. It's also the same year, though, that I received one of the firm's Trader of the Year awards. So now you fast forward, I'm the co-founder and head trader of True Trading Group. And along with my team of 8 other professional trading mods and an over 30-person staff, we have helped thousands of members from all over the world to reach their goals. We have members in 114 countries. We have over 10,000 members worldwide. And we are the fastest growing and highest rated premium online educational platform that combines university level trading and investing courses, premium stock market tools, live workshops, individual mentorship, coaching for stocks, options, crypto, and futures. We day trade, we swing trade. We also cover long-term investing. There's literally something for everybody here at True Trading Group. So if you guys are new, welcome. Smash the like button, subscribe, turn on your notifications. Make sure you guys never miss out on any of these live streams. We're dropping golden nuggets on a regular basis. I will always tell you guys exactly what it is that I'm thinking. I will tell you what I think the markets are going to do. We won't just talk about what they already did. And I tell you about positions I'm in, positions I'm getting into, positions I plan on getting out of, entry points, exit points. So make sure you guys tune in. Okay. I'm not going to be right all the time. I don't sit here and pretend to be, this 100% win rate trader, but I'm a damn good one. I'm right a hell of a lot more than I'm wrong. But I am going to be wrong sometimes, as traders are. I think one of the most important parts about being a good trader is to be a good loser more so than you are a good winner, because your trades, your P&L is a result of it's a culmination of all your wins and losses. Everyone's going to have losing trades. You can't get blown up every time you're wrong. You have to learn how to minimize your losses and actually control your risk so that on average, you make more money on your winning trades than you lose on your losing trades. Every professional trader makes more on their wins than they do their losses. Every struggling amateur trader loses more on their losing trades than they make in their winning trades. And that's not a recipe for consistent success, ever. And that's one of the things that you guys will learn as a member of True Trading Group. Okay, so I'm a big stickler for that kind of stuff. I'm a big stickler for risk management when it comes to that kind of stuff. Okay, so let's kind of get into what we got cooking here this week and where we kind of stand in the markets. I told everybody, and I look like a genius right now, right? I know I look like a genius right now. If you've been following my YouTube channel for the last couple of days or last couple of weeks, then you guys know that on Sunday evening, I announced to everybody on this channel that I was buying in my long-term portfolio Monday morning. I look like a genius right now because as it stands, that's the low. You don't have to take my word for it. Go back and watch the YouTube video. It's right here on this YouTube channel. That's Monday morning. Right there is where I started buying stuff in my long-term portfolio. I dumped a lot of money into the markets at that time. And it's not necessarily because I believe that it's like, oh, that's it. The bottom is in. I'm trying to pick the dead bottom. I'm not trying to pick the dead bottom. I never do. And I don't suggest that anybody on here ever tries. Trying to pick the bottom is a fool's game. I'm telling you guys this right now. I have no idea where the markets are going to bottom out. I don't know if the bottom is in. I will tell you, if we don't have a recession, there's a really good chance that Monday was the low of the year if you don't have a recession. I think if you do break that low, then the markets are going to start to price in a recession. And I don't mean like just pierce that low. Like, I don't mean like, oh, it gets to like the SPY gets to like 4780. I mean, 478, 478 on the SPY, or like the 4700s on the S&P. That's not necessarily that level breaking. It's that level being pierced and being tested. I mean, like if you really crack this and like this, the S&P goes to like 4500s, then I would say, okay, now you're pricing in a recession, and the markets would believe that the recession is the most likely outcome in the next 6 to 9 months. Right now, I know recession probabilities have gone up to like in the 60s, but the market has not priced in a recession. You're not pricing in a recession at this time. And I think if you break the low, that means we're in a recession. And there's been enough constructive, price action over the last week specifically to be indicative of a bottom if we avoid a recession. And again, that's a big if. I don't know. I'm not the person that's going to predict the future for you. I'm sorry if that's what you're looking for. My job as a trader is not to predict the future. My job as a trader is to identify high probability scenarios in the market and put myself on the right side of that probability over and over and over again, and implement, and practice sound risk management every single time. That is my job. And the reality is nobody on here really knows what's going to happen. Nobody on here really knows if we're going to have a recession or not. Everybody has their thoughts. Everybody thinks, but nobody actually knows. Everybody has their thoughts. Everybody has their own analysis, but nobody actually knows. So what I always do, I have a very specific set of rules when it comes to long-term portfolio stuff and long-term investing that I have followed for 2 decades. I'm going to follow it for 2 decades more. And what is that? What are those rules? I'm glad you asked. My rules are as follows. When the S&P enters a correction, which means it falls by more than 10%, I buy some stuff. I don't buy a lot, but I buy some stuff. Then when the S&P enters a bear market, which means we decline by more than 20%, I buy a lot. And then if you enter recession, I then take the rest of the cash that I have available and it goes into the market once it's confirmed that we are in a recession, and the markets then go through to a deep bear market, down not just 20-something%, but now down 30-something%. That's when I become then fully invested. And the reason why I do that is the following. It's not because I'm trying to pick bottoms in stock market crashes. I will never know when the bottom is going to be put in during a stock market pullback. But here are the statistics. There's a correction every 1 to 1.5 years. There's a bear market every 4 to 6 years. There's a recession every 7 to 8 years. So by probabilities alone, over the last 125 years, whenever the market pulls back 10%, you should buy it, because there's a really small chance that that pullback of 10% is going to lead to a 20% down bear market. And then by historical standards over the last 125 years, every single time that there is a bear market, you should buy it, because the chances are that it will not lead to a recession. That doesn't mean that recessions don't happen. It doesn't mean that recessions, that we might not have a recession. It doesn't mean we won't have a recession this year. We still could. But that's a very specific set of rules that has allowed me to take advantage of every single stock market decline that we have had over the last 2 decades. And I've been able to take advantage of them, honestly, as best as I could have possibly imagined. If you look back at and again, if you're not a member of True Trading Group, you probably might not know this stuff. Or if you haven't been following my YouTube channel for a while, then you probably don't know this stuff. So it might sound like I'm like a Monday morning quarterback and saying like, oh, look, I did this when there's no proof. But there actually is a bunch of proof. If you just go back and watch my YouTube channel, all of my live streams through all the stock market crashes, through COVID, through 2022, through the 2023 banking crisis, all my live streams are on this channel. You can go back and you can listen to the stuff that I was saying and the stuff that I was doing at that time. And also members of True Trading Group that are with me here on this live stream, they can testify and they can verify all of this. What I'm saying to you is accurate and true. In 2020, I did the exact same thing. We fell 15% during COVID. I bought some stuff. We dropped down 25%. I bought a whole lot more. Then we were down 30% and I bought more. Markets then exploded over the next couple of years. Then 2022 happened. I actually bought in May when we were down 15% or so. Then I bought again in June. We were down 24% or so, whatever it was. And those were my buys in 2022. I bought again on August 5th of 2024 when the markets were down 10% during the Japanese yen carry trade. And now we were down 20% here on Monday, and I bought more on Monday. The point is that when the markets are down over 20%, it's not that I think I'm buying the lowest price. I just know that I'm buying a good price. And that's really all that matters, because if you have a long-term outlook, if you're going to be holding these stocks for more than the next 6 months, right, then the thoughts are that if you buy when the S&P is down 22%, chances are 1 to 2 years from now, even if you go down another 15% or so, or 20% or so, even if you have a bad recession and the markets go down 40, 45%, all these people out there that are calling for like this 80% decline, crazy. It's not going to happen. S&P is not going to go down 80%, but it could go down 40, could go down 45. It's been down 50 before. Great financial crisis of 08 went down 50%. .com bubble, S&P went down 50%. So in a worst possible case scenario, the way that I look at it, the worst recession we've ever had, we went down 50%. So I look at that as that's my worst case scenario. So that's why as you approach that, I buy. Simple as that. I don't care what the reason is. I really don't. Everybody gets so caught up in the reason. And every time it's always, oh, it's different this time. It's different this time. It's different this time. It's always different. There's always a different reason why the markets might crash. There's always a different reason why you might go down further. But if you maintain a long-term outlook, you can never go wrong buying when you go into a bear market. Ever. Because the bear markets don't happen often. They're rare. You've been blessed. I really hope you guys have been taking advantage of this, because you have been blessed over the last 6 years. We have had 3 bear markets in the last 5.5 years, 6 years. You have an idea how incredibly uncommon that is? In the last 125 years, you get a bear market once every 4 to 6 years. We have had 3 in 6 years. 2020, 2022, and now 2025. That's nuts. $5 years. It's really 5 years. March of 2020 until now, it's really 5 years. You've had 3 bear markets. It's crazy. So hold on one second, guys. Okay. So anyway, yeah. So that's kind of where we're at with everything there. So yeah, I went in there. I bought some stuff on Monday. I bought all my tech names. I bought all the Mag 7 on Monday. Or over the last Friday and Monday. I bought all the Mag 7. I bought Apple, Alphabet, Amazon, Meta, Microsoft, Nvidia. I bought Netflix. I bought CrowdStrike, Palo Alto. Fortinet, Uber, Palantir, Kava, Chipotle, Broadcom, Berkshire Hathaway, JP Morgan, Wells Fargo, Oracle, IBM, and some others. But yeah, I went to town. I went to town buying some stuff. So how many of you guys took advantage? How many of you guys bought some long-term portfolio stuff with me on Monday? If you guys are members, or maybe you guys just followed me on my YouTube channel. And if you're not a member, how many of you took advantage and bought some stuff on Monday? Is that an anomaly, or is it that a sign that the market is faulting more frequently? No, that's an anomaly. That's an anomaly. No, that's an anomaly. Okay, that is definitely an anomaly. I just think it's an anomaly because of what happened during COVID. Like you had this massive injection of capital and liquidity into the markets during COVID, and it really just flipped everything upside down, and it created massive inflation and everything else. And I just think it's an anomaly of the times. I don't believe that is a sign of like the markets are faltering more frequently. I think that no, I bought Tesla not on Monday. I bought Tesla previously. I bought Tesla. I bought Tesla previously. I think I bought Tesla here. I think it was on this day. I think, if I'm not mistaken. But I bought Tesla. I bought Tesla or a little bit earlier than that. I bought somewhere in here. I don't remember exactly what day it was. I bought Tesla somewhere in here. So I did not buy Tesla again on that Monday. Wow, Dylan, great job, man. Dylan goes, I bought with you the last 3 times in the long term. So Dylan, you're sitting real pretty, brother, then, huh? You're sitting real pretty. 3 bear markets in 5 years. Is that because the fiat currency is going by the wayside? Absolutely not. I really don't believe that. I know that is like the big argument for like all of your mega bears out there that like is the reason why they think that the U.S. is going to basically become a third world nation, and the U.S. stock market's going to go down 80%, and it's going to be the end of days and the end of times, and we're all going to be standing in bread lines and soup kitchens and everything else. I don't buy it at all for a second. I really just don't. I really don't. I think it's actually. I think it's really stupid. I think it's a really stupid concept. And maybe I'm wrong. And if I'm wrong, I'm going to have to live with me being wrong. I just don't buy it for a slightest second. I just don't. But again, maybe I'm wrong. Maybe wrong, but I don't buy that. I don't buy it. Yes, Seymour Life. Absolutely. Goes, that's good to know. So we're going to be making money together for a long time. Let's go. Yeah, man, I'm not going anywhere. Listen, I've been making money for the last 18 years. I plan on doing it for another 18. Plan on doing it for another 18. It's the greatest job in the world. It's the greatest job in the world. Where else can you get to say that every single day, okay, this combination of things, where else? You find me another job that every day you can work on your schedule when you want, however long you want, however active you want to be or not. You get to decide every day. Every day is different, right? Every day is different. It brings something in completely new that you couldn't imagine that's what your day was going to have. And you could literally make more money in 10 minutes than you could working an entire 10-hour day. Like, where else can you do all of those things and be dependent on no one other than yourself? I don't know any other job that allows you to do that. It's the greatest damn job there ever is. And on top of that is 100% recession proof. What other job can you do can check all of those boxes? Being a trader is 100% recession proof, because guess what? The stock market's still open during a recession. I don't need the markets to go up to make money. You buy put options, you short stocks. We make money on the way down too. Literally, it was last week when the markets tanked 15% in a week, right? That was when one of our moderators, Shai, she had her biggest week ever in her entire trading career. She literally made like a teacher's salary in a week. You don't need the markets to go up in order to make money. That's what's so great about it. That's why, like, when you talk, and maybe sometimes I'm insensitive to it. I try not to be, but I always tell people when everyone's like, oh, what's going to happen? Are we going to have a recession? I'm selfishly, I guess, I'm just kind of like, I don't really care. I'll tell you what I think. I still don't think that we're going to have a recession. Yes, the chances have risen dramatically. Honestly, it's probably 50-50. If I gave you it's probably 50-50. But if the tariffs, it's all going to rest on tariffs. I've said this for the last 2 months. It's all going to rest on tariffs. If the tariffs stay here for a long time, we're going to have a recession. No way around it. If the tariffs get negotiated or come off quickly, then we could still avoid a recession. So I have no idea what's going to happen with tariffs. Therefore, I don't feel comfortable making like a stamp claim, like yes or no. But for me, I'm still leaning on the no recession camp because I don't think that the tariffs are going to be here for a long time. Now, China, on the other hand, I think that's going to be here for a while. The trade war between the U.S. and China, I think, will last for quite a while. Just from what history tells us. In 2018, we had a trade war with China. It lasted months. And you got this volatility for months. I expect that to be the case this time. This time, the negotiations are far more complex than they were back in 2018. There's far more issues at hand. And there's far more at stake with the size of the tariffs that have been placed on the two countries. It's basically an embargo. You're basically shutting off all trade between the two countries is essentially what's happening. 145% tariff, you're just closing off all trade with China. 125% tariff, they're closing off all trade with the United States. Now that's going to hurt both countries. It'll hurt China more. China buys only 1/5 from us that we buy from them. So they are a manufacturing economy. We are a consumer-based economy. So those tariffs, and if we stop buying their stuff, it will hurt them more. Hopefully, we come to trade deals with all these other countries so that we can replace the volume of trade with China with other trade partners, which also further hurts China. What you don't want to see happen is we don't come to agreements with other countries, and then other countries come to agreements with China, and then China replaces us. So you want to hope that we come to a deal with the EU, with Canada, with Mexico, with everybody else, so that we can isolate China and then make China weaker coming to the table. But China's no dummy. They're masters of currency manipulation. I'm convinced that they're part of the reason why the 10-year Treasury yield and the 30-year Treasury the yields are moving to the upside. I think China has been dumping treasuries, and there's a lot of selling coming out of Europe, and I think people are mistakenly thinking that that's our European allies. It's not. After 2014, I think it was, China moved a lot of their holdings of U.S. treasuries to European countries to try to get around when Russia invaded Crimea. The sanctions that were placed on Russia was a warning sign to China, and China started moving some of those assets out of China in the event that something like that was to happen. So they would still have access to those assets in European countries. So China still has hundreds of billions of dollars in U.S. treasuries in Europe. So you can see selling flow coming out of Europe. It doesn't necessarily mean that it's coming from France, okay, or Germany or Italy or any one of our allies in Europe. It's still probably China. And I would probably say maybe also Japan. Now, Japan is an ally, but Japan needs to try to control their currency. So what I think has happened in the bond market is you've probably seen China in a malicious way selling U.S. treasuries to send bond yields higher to have leverage for their negotiation when it comes to trade. Because right now, if yields are moving down, the U.S. has all the leverage against China for the negotiation. If yields push up in the United States and you start to create disruptions in the bond market, then China now has leverage also for those negotiations. And then there'll be more of a fair negotiation rather than one side having complete dominant leverage over the other. So that's why I think China is doing that. In doing so, they've sparked and ignited a basis trade unwind. And that is when massive institutions like a Citadel and other hedge funds, they buy the cash security treasury, they go short the futures contract of the treasury, and they make the spread as the futures contract approaches maturity and the prices come to meet. They make that spread. It's a very small spread. That's why they leverage up the trade X amount of times over, and that trade is now being unwound, because when you have such a sharp, massive move, when it's such a sharp, massive move, that trade gets disrupted, and you're now getting some margin calls, and people are unwinding the leverage of that trade, and that's what's been putting pressure on the bond market. At least that's what I think is happening. So I think you had probably some Asian selling of treasuries, and that sparked a basis trade unwind, and that's why yields have pushed higher, even though you got ice cold inflation data. Yields should have gone down yesterday and today, and they didn't. They went up. Yields were going down. We got all the way down to 3.87 on the 10-year going into the tariffs going on. And as soon as the tariffs went on, the 10-year reversed. That's why I don't think that the 10-year moving higher. Some people are like, oh, well, they're pricing in higher inflation. No, they're not. If they were pricing in higher inflation, then 10-year bonds, the yields would have been moving higher for the last several weeks as we were scared about tariffs, like the inflation expectations were. But that's not what happened. Bond yields were going down because everybody was worried about the economy and people were buying bonds for a safe haven. Okay. Right. And you have, as people buy bonds for the safe haven, the bond price goes up, the yield comes down, and all of a sudden the tariffs went on and it reversed. So that means that as soon as that China was probably sitting there like waiting. Are they going to do it? Are they going to do it? Yep. Tariffs are on. Sell button. That's what I think has taken place. So that's where we're at. I don't know how it's going to unfold. I think that at some point the Federal Reserve is going to step in with emergency quantitative easing. I think the Fed is going to probably inject $1 trillion worth of liquidity into the bond market, and they're going to try to stabilize bonds and bring yields down. And the world's going to get pissed off about it because everyone's going to think that it's a political move, or everyone's going to think that they're bailing out the hedge funds that are stuck in that trade. And whether that's true or not, if they're bailing out, if it's seen as they're bailing out the hedge funds, you cannot allow the U.S. Treasury market, which is the most liquid market when it comes to credit in the world and the most stable credit market in the world, or debt markets in the world, you cannot let that get disrupted. If that gets disrupted and there's liquidity issues because of this blow up and this unwind of a highly leveraged trade, the Fed's going to have to step in, provide liquidity, and stabilize it. Otherwise, you run the risk of the financial system breaking, like the plumbing of the financial system, like orderly flow in debt markets in the bond market is extremely important. And when that gets disrupted, that's when you have major credit issues and credit freezes and lending comes to a halt. And that's when you have severe recessions. That's when you have like a 2008 type scenario. You can't let that happen. So they would have to do it. I think they will. People were asking me the other day, like, do you think the Fed's going to do an emergency rate cut? No, I don't think they will. I think they will do emergency QE though. Quantitative easing, that's what QE is, meaning they're going to start buying stuff, provide liquidity, stabilize the bond market, get yields to cool off. And then they'll wait and see what happens with inflation before they start cutting rates. But today's inflation number was insanely good. The lowest number in like 4 years. And yesterday's CPI number was also really good. Both numbers were well under expectations, which is a good sign. However, that doesn't factor in any of the tariffs yet. The tariffs you'll start to see in April's number, but really May's number is really when you'll see the full effect of tariffs in the May CPI report. So we still have a month or two before you really start to see what type of an impact tariffs had on inflation. Hopefully they should just be a one-time, like the 10% tariff should just be a one-time price hike and then stop from there. It should not, you have to realize inflation is a rate of change. It's not a price. Tariff is a price. Inflation is a rate of change. So a 10% tariff means a 10% one-time price hike. Inflation means a continuous increase in that percentage. Okay, so we'll see if it's an ongoing problem with him. That's what the Fed's probably going to be waiting for, right? What does this all mean, though, for us as traders? It means the greatest damn trading opportunity you guys are ever going to experience in your entire life. And I'm not just saying that to you because I'm not trying to be like, speak superlatives or exaggerate in any way. It really, truly is the truth. Members of the trading group are having some of the best trading sessions they've ever had in their lives. And it's not here. I'll prove it to you. Members of True Trading Group, do me a favor. You guys making money right now? Type the number 1 if you guys are making money and you guys are becoming better traders with TTG. Type number 1 in chat right now. Just type number 1 if you guys are making money. And anyone that's on here that's not a member, I would pay attention to how many people type the number 1. Because these are your friends, your family members, your coworkers. If these people can do it, so can you. They're not smarter than you. They're not luckier than you. They don't have more time than you. That's not why they're making money and you're not. These people are just like you. They are members of TTG. They found us on a live stream. So there's no reason why if they can do this that you can't. All right. So those of you that are not members, I'll tell you guys this real quick. Okay, guys, this real quick. You guys can just go to ttgoffer.com. We're doing this a little bit different. I have been letting people sign up for a 90-day membership for just $250. TTG is normally a year-long membership. You guys can go to ttgoffer.com. Everything on that page is included for 90 days. You get our courses. You get Benzinga Pro's newsfeed, Trading Views charts, the trade idea scanner, unusual options activity, dark pool data, options flow, short data, congressional trading data. It's all included for 90 days for $250. Go there now, ttgoffer.com. You can also send a text message to 1-888-621-2127. Again, that is 1-888-621-2127. The phone number is right down there at the bottom of your screen. Text that number now if you guys have any questions. If you used to be a member and you want to come back home for the 90 days, if you are a trial member, you want to come home for you want to join for the 90 days, you must text that number. Otherwise, it'll cost you $1,500 to join the annual membership after your trial. If you want to join for 90 days, I'm letting people do it here now during this time of crazy volatility and insane market action. So go to ttgoffer.com now. Any questions? Text us 1-888-621-2127. I got to go. Guys, set your reminders Sunday night. Okay, Sunday night, 6:30 p.m. Eastern time. I'm going to go live right here. I'm going to be doing a giveaway. So I'm going to be giving away some prizes. So make sure you guys tune in. And we'll also go over what we expect next week with earnings underway. And I will go over with you guys my exact trading plan